So hi guys, resuming accounts class. Previous class we were discussing consolidation of subsidiary and we learned 3 sums were pending. If you remember those 3 sums, they were basically illustration 5 and 2 practical sums. First let's do of the small sum, illustration number 5, and then we'll do the one full sum and then we'll close this session. We just have 3 sums. No other concept is new, it's just practice. Now illustration 5 is a new sum added in the new study mat, which is not there in the old study mat of consolidation. So you can mark it as important. Is it 5 everywhere? Study mat also? 4. For you guys it is 4. Question, I say study mat question 5. For some of you it will be in our book illustration number 4. It's a new sum added. Now start guys. Let's read the question and solve. It's nothing difficult. You don't have to prepare consolidation over here. It's just one small step that you have to do. I will solve it. First time, see there are some sums that when we are doing it for the first time, it's not going to be easy to do by yourself. There are in fact some sums when I myself look at the book, first time I may not understand how the solution is derived. But when you look at the answer, we can reverse look and understand, okay, this is what they have done. Are you following guys? Okay. So some sums you don't feel like you don't know what to do. The more you practice, you will get it. Variety Limited holds 46% shares of VR Limited. Who is the holding? Who is subsidiary? Variety is holding, VR is subsidiary. For holding subsidiary, you need more than half. This is what? 46%. No holding, no subsidiary. Are you following guys? You can't be in the same flow. This is holding this subsidiary. Holding 46% means no holding, no subsidiary. Are you getting it guys? The shares were acquired at a market price of 17 per share. How many ever shares they purchased? The balance shares of VR are held by a foreign collaborating company. What is the balance shares percentage? 54%. That foreign collaborating company only is holding company. Correct? They have 54%. I am the minority. A memorandum of understanding, MOU guys, has been entered with the foreign company providing the following. Who entered into MOU? Variety Limited and foreign company. So the structure if I draw so far, it's somewhat like this. Variety in VR has 46. This 54% is with some foreign company. Between Variety and foreign, we are now entering into an MOU. This only is the MOU. What is the MOU below? The shares held by the foreign company will be sold to Variety. Now I will become holding. I will become a holding of 100%. Correct? So Variety is taking over shares from foreign. So I am purchasing how much guys? 54%. For which I have to pay something. That means you have to compute purchase consideration. The price per share, how much to pay to whom? Foreign company, is calculated. A little bit of amalgamation chapter in consolidation. If you don't know amalgamation, you have to pause the video, go back, watch full amalgamation, especially computation of purchase consideration part is calculated by capitalizing the yield at 15%. What is yield? Yield for this purpose would be 40% of the average pre-tax profit of the last 3 years. Okay, they have given first paragraph to compute purchase consideration. Let's go to second para and come back. Very easy. You have to take average profit, take 40%, fine. Capital is at 15%. We have done a similar sum, similar method in amalgamation, but I'll come back to the adjustment later. The actual cost of the shares to the foreign company was 5,40,000. Foreign company purchased this VR at 5,40,000. Are you following guys? The profit that would accrue to them, what is the profit they will get? Foreign company, they purchased at how much guys? 5,40,000. Now the profit is what Variety is going to pay them. Let's say for example Variety is paying 10 lakhs, then the profit is 10 lakhs minus 5,40,000. Are you understanding? See, if you are the foreign entity, you purchased VR for 5,40,000. Now whatever consideration I get minus my cost will be profit. Correct? So my cost is 5 lakh 40. The profit that would accrue. How I will find profit? Above step. Above step I will compute PC. Correct. The profit that would accrue to them would be taxable at an average rate of 30%. That means what? Capital gains. Are you understanding? Capital gain taxation on sale of entity 30%. The tax payable will be deducted from the proceeds and variety will pay to the government. What is that? TDS. So whatever consideration I have to pay, I will deduct my TDS and balance only will be paid to the foreign entity. So now there with consolidation chapter, we are including PC of amalgamation, PC computation plus income tax little bit. Of the net consideration, 50% would be remitted to the foreign company. That means if 100 is the amount payable minus TDS, correct? Balance only is net consideration. Are you following, guys? You know TDS, income tax, everybody would have studied. TDS is you deduct the money and pay the balance. Of the net consideration, 50% would be remitted to the foreign company immediately and balance is payable as an unsecured loan payable after 2 years. So to summarize the transaction, Variety Limited, who has 46, is now buying 54 from foreign. For that they gave 3 adjustments: adjustment A, adjustment B, adjustment C. Adjustment A tells me how to find PC. Adjustment B tells me while you are paying this PC, please reduce TDS. Adjustment C tells after reducing TDS, pay 50% now and 50% is converted in the form of loan. So for example, if PC is 100, they gave TDS as 30%. So I will reduce 30% as TDS, then I will be left with, in that 70 pay 35 now, 35 converted as later. That means my sum revolves around computing 100. If I find PC, sum is over. Correct? But still there is some paragraph below. The above agreement was approved by all concerned for the time being, given effect to 1st April 20. That is the date of acquisition. The total assets of VR, now only we are coming to subsidiary. The subsidiary VR as on 31st March was 1 crore. It was decided to write down PPE, current liabilities, some adjustment and share capital breakup they have given. They have also asked to find out goodwill or capital reserve. So you have to compute what you paid versus what you got. What you got only is this para. Are you understanding of net assets? Look at this, cost of the total assets, asset liability they are given over here. So what I got is over here. What I paid is point number A. I can compare both and find goodwill or capital reserve. That is the last step. First let me do A, B, C. Did you get the whole structure, guys? Whole structure is find PC, reduce TDS, split into what is paid now and what is payable later, and then find goodwill. How will I find goodwill, capital reserve? Compare PC with what I got. Are you understanding, guys? You got the flow. So we will go in the same flow. First I will compute PC. You will help me. Forget the entire sum. Just focus on the first paragraph, guys. This one, point A. How to compute PC? First they are saying it is computed by capitalizing the yield at 15%. So whatever is the yield, I have to capitalize. I am first computing PC, guys. Whatever is the yield, I have to capitalize that 15%. That means I should get a return of 15%. In other words, assume yield is 15. 15 divided by 15% is 100. On my total, my return should be 15. That only is called yield. Are you following, guys? But they have not given what the yield is. They have told yield is nothing but 40% of average pre-tax profit of last 3 years, and last 3 years profit is 30, 40 and 65. So what is the average of last 3 years, guys? Quickly compute with me. 30 plus 40 plus 65. 30 plus 40 plus 65 whole divided by 3. My average is 45, correct? But we are not taking full average. What is saying? 40% of the average, correct? So what is 40% of 45? 18, not 18, 18 lakhs. So my yield is 18 lakhs. If I have to get 18 lakhs as return, what is the capitalized value? 18 lakhs divided by 15%. 120 lakhs is my purchase consideration. Point A is done. Are you following? Only question looks complex. Steps are simple. Are you following, guys? Understanding? I am just following what they told. They told take average of last 3 years, apply 40% and then capitalize at the yield of 15%. So yield is computed at 45 into 40%, 18 divided by 15%, I got 120 lakhs as PC. This is what Variety will pay the foreign company. Are you following, guys? Everybody clear? Let's go check. That should be the answer. Okay. 120 lakhs is what my consideration is. Step 2 is what? I have to find TDS. But to find TDS, I should first find gain. So this company, for foreign company, what's the gain? They purchased at 5 lakh 40. Look at this question they told. They purchased at 5 lakh 40. Now, follow very carefully, guys. Look at this. Now, purchase consideration is 120 if you buy the whole company, correct? What do I mean by whole company? Look at this. The shares held by foreign company will be sold to Variety. The price per share will be calculated by capitalizing the yield at 15%. That means the whole company's value is 120 lakhs. What I have to pay is, I have to pay for the shares held by foreign company. How many shares are totally available in this question? Look at this. The paid up share capital of VR is 20 lakhs. 2 lakhs into 10. So now come down here. 2 lakh shares. I am already having 46. Foreign is having 54. How much is this? 92,000 here. 1,08,000 only I am buying, correct? But what has happened? The whole company is worth 120 lakhs. In amalgamation chapter, we used to stop the sum with 120 lakhs, correct? Because in amalgamation, I am purchasing the whole company. But here, you are purchasing only 54%. So I have to find proportionate price. So can I write 120 lakhs is the total value, out of which the total shares is 2 lakhs. So per share is 60 is what is worth per share. Let's check. So per share price is 60. Are you following up? See, in amalgamation we never did this step, because in amalgamation we used to stop with 120 lakhs, if those who remember amalgamation, and pay full 120, because you are buying the entire company. There is no minority in amalgamation, correct? Here I am getting only 54%. In other words, I am buying only 1,08,000 shares. So per share is worth 60. How much should I pay them? 1,08,000 into 60, which is 64,80,000. Or in other words, you do 120 into 54%. This is what I am going to pay. How much, guys? 64,80,000. This only I should pay. Are you following, guys? Vishnu, getting it up? Now this is a sum which is mixing PC from amalgamation and consolidation concepts. Are you getting it? So the consideration I have to pay, purchase consideration, I have to pay for 54% shares is 64,80,000. Are you following, guys? Clear? So now what is the gain foreign company got? Now I am going to B. Foreign companies gain. Before that, let me revise whatever we have done till here. First, I computed the value of the company by capitalizing yield at 18 lakhs by divided by 15%. We got 120 lakhs is the value of the company. But in that, what I already have is 46%. So why should I pay for what I already have? I will only pay for the difference of 55% and take home 1 lakh. 8,000 shares is what I'm going to take home now. For that 1 lakh 8,000 I have to pay 60 per share, which is 64 lakh 80. In other simpler way, you can do 120 lakhs into 54% and find 64 lakh 80. For the foreign company, they are getting how much? 64 lakh 80. They are paying how much? Their cost is 5 lakh 40. So their profit is capital gains 59 lakh 40,000 is my capital gain. On this, don't worry about income tax rates. Here they have straight away given tax at 30%. How much? 17 lakh 82,000 is the amount of tax, or in other words, TDS that I will deduct. Let me cross check. 17 lakh 82,000. Can you see here, guys? 17 lakh 82,000 is the amount of TDS. Now what I discussed in the start of the sum, look at this. Come back here. If you remember the start of the sum, first I will find the PC, then reduce TDS and then split half. So what is the PC, guys? 64 lakh 80,000. Come to step number C. Step number C, 64 lakh 80,000 minus TDS. How much? 17 lakh, correct, 82,000, which is my TDS, which I will pay to the government. So what is the balance I have to pay, guys? 46 lakh 90. This I will pay in two forms. Like how? 50% I will give in the form of cash now. 50% is converted to loan. What is that 50-50, guys? 23 lakhs. Here also 23 lakhs 49,000. Are you following, guys? Come down, look at the answer. 23 lakh 49,000. The first part of my sum A, B, C, D is done until discharge of PC. Are you following, guys? This has nothing to do with consolidation. Has nothing to do with consolidation. It's just computation of PC. New sum in new study mat. So we are learning. Are you following, guys? Again, step 1 find PC. Step 2 reduce tax TDS. Step 3 find the mode of dispersal. Kalyan, getting it clear, guys? That's it. After this, what I should do? Compute goodwill or capital reserve. Now, goodwill or capital reserve is what I paid with what I got. Correct? Now very careful, guys. Here, after this takeover, you have 100% share. Everybody understood till here? Anybody making a note? Everybody copied this? This part done, guys? Anyway, answer is done in study mat. Same thing only, just more detailed steps. This part done, 6480. I hope this part you got it. Make a note. Recording, please pause and write down. Otherwise, also answer is there in study mat. But please write off when we are solving itself so that later it's, and this is the last step. Anybody writing this? Book also is there. Study mat, I think the answer is given in a much more condensed manner. Same thing. Done, guys. And this is the last step, mode of payment. Somewhere you make a note, or at least if you know how it's come, that's it. Now I have to find goodwill or capital reserve. Those who are writing, quickly make a note. How much? 2 lakh? 19,000 is Kalyan's goodwill. I will tell the logic. Tell me if you do the same thing. What I paid versus what I got. What I got, now I got 100% of the company. Correct? I got the full company now. I am the full holding. No more minority. So what I got should represent net assets of 100% of company. What I paid is of two forms. First, I already acquired 46% and now I am acquiring 54. So I have to take both. Are you following, guys? So what I paid includes double thing. Now what I paid for 54, what you paid, guys? 64 lakh 80,000. Correct? This is what you did, Kalyan. So what I paid for 54 lakh, 64 lakh 80,000. The common mistake everybody does is they take only 64 lakh 80 and you forget to take 46% which was already paid in the past. How much did you pay for 46%? Can you find out from the question? They are given a subtle hint in the question. Look at the first line. Was acquired at a market price of 17 per share. Correct? So, how much you purchased for 46%? 92,000 shares. So, what you paid is 92,000 shares into 17. How much? 15? 15 lakhs? 64. Correct? No. Add both. How much you will get? 80 lakh? 44. This is what I paid. Cost of investment. Are you understanding, guys? Vignesh following. What I paid is 64 lakh 80 plus 15 lakh 64. What I paid now. This is what I paid now. This is what I paid in the past. Don't write that in exam. Past now and all. 46%. 15 lakh 64. 54. 64 lakh 80. Are you understanding, guys? That comes to 80 lakh 44,000. That only should be there somewhere here in the end. 80 lakhs 44,000. What I got is there in the question in the paragraph below. Net assets. Straight away they gave. Total assets is 1 crore. But look at this. 1 crore is my total assets. But from this, I have to reduce property, plant, equipment by 1 lakh 75. So I have to reduce 1 lakh 75,000. Any other adjustment? Current liabilities on the same date is 20 lakhs. I have to reduce what? Current liabilities. So you find net assets. What's your net asset, guys? 78 lakh 25,000. So I am making a statement. Tell me if the statement is correct. For a company VR which is worth net assets 78 lakh 25,000, I have overall at different points of time paid 80 lakh 44,000. So my goodwill will be 2 lakh 19,000 is the goodwill. Check the answer. Answer also says goodwill is 2 lakh 19,000. Are you following, guys? Clear? Hello? This is the first time I am also solving this sum. Now, sir, new sum, sir, how you got it correctly? No, I am being honest. Any faculty will first to go look at the solution. I don't have exam. I looked at the solution, understood the solution, I am taking it over here. Are you following, guys? I can sit down and solve. It might take me half an hour to understand. I don't want to waste time. So everybody will look at new syllabus, new questions. How do I know? I'm just being honest. I looked at the answer. I know how to solve. I'm teaching how to do it. Now you also know how to do it. A similar sum like this comes, you know how to tackle it. That's all that matters. Are you following, guys? Clear? Understanding, guys? Easy. You can mark the sum as important or double important. New sum in new syllabus study mat. That means in the initial few attempts, the examiner will want to ask this for a solid 5 or 10 mark question. I think it's easily worth 5 or 10 marks and it's easy also. But if somebody has not seen the sum, you will definitely struggle. Somewhere you will get stuck. Of course, some of them will get it correct first time. That's good. Understanding, guys? Easy. Hello? Perfect. Can we proceed, guys? That's about it. I think this is the only new sum which is there in our study mat of consolidation of subsidiary. I've seen all the sums now. This is the only new addition, guys. Now we'll go for last sum of the day. We have only 2 more sums left. Practical problems, sum number 4 and 5. For you guys, it's question number 19, 20. Okay. Yeah. Illustration 4 in ICA study mat. Illustration 4 in this book also. For others, where it's continuous numbers. Illustration 19. And we have 20. With that, consolidation of subsidiary will come to an end. Today I will do only 19 and close our session. proper sum for 15 to 20 marks should take us about 30 or 40 minutes. That's it. ICA book, practical question number 9. Thank you for saying. In this soft material, everybody has this soft copy, guys. I hope you have it. It's basically ICA study mat reformatted to make it more user friendly. Here question number 4, our book question 19, ICA question number 9. That's it. Okay. Fine. A Limited acquired, last sum, all steps, step 1 to last step. When I read the question, you will feel very familiar. I want you to try this sum and get confidence, guys, because the next sum is not going to be easy. It's a proper big sum. This is the last sum where you can gain your confidence. A Limited acquired 1600 shares in of 100 each in B on 1st July. What is 1st July? Date of acquisition. I am going to be exam oriented in this sum. Exam required steps. That's it. On 31st December, balance sheet of 2 companies is given below. What's my date of acquisition? 1st July. Date of consolidation. That means here acquisition happened middle of the year. Unlike previous sums, 1st April, 31st March, somewhere in the middle of the year. That means all your pre-post will split. You have to compute it accordingly. Okay. They acquired how many shares? 1600. Go to the question. Try to find number of shares of B Limited. How many they have? 5000 or 2000 now? 5000 is for A. For B it is. So I have 1600 out of 1600 only. Yeah. What's my percentage? 80%. That's it. Step 1, step 2 over in the first para itself. Are you getting it? Date of acquisition 1st July. Date of consolidation 31st March. Same financial year. Same financial year. Holding shares. Same financial year. Look at this. 21. It's a calendar year. Calendar year, guys. It's basically 2021. So in the same year, middle, exactly after 6 months of. Yes. Okay. Now let's come down. Look at the steps or look at the details. Share capital. Fairly simple data. Reserves and surplus simple. Trade payables. When I read, I will look. Is there something peculiar which is new, which was not there in other sums? PPE, non-current inventory. Okay, all great. Come down. Notes also. Reserves. 2 reserves. General reserve. P&L. Bank overdraft. They are given a liability. PPE values. Land and building. Plant and machinery. Non-current investments. Investment in B Limited. Cash and cash equivalents. Nothing great. Come down. One small paragraph for adjustment. The profit and loss account showed a credit balance of 30,000 on 1st Jan. This is fully pre. Out of which 10% dividend was paid on 1st August. What dividend is this? Pre-acquisition dividend. In our steps, we have to consider all of this. A Limited credited the dividend received to its P&L. We have to do rectification. That means the P&L balance includes this dividend. The plant and machinery which stood at 1,50,000 on 1st Jan was considered worth 1,80,000 on 1st July. That means revaluation of 30,000 on the date of acquisition. This figure is to be considered while consolidating the. That means they have not considered. If you look above, PP is how much? They have taken at 1,80,000. The plant and machinery which stood at 1,50,000. Sorry. Here, guys, this land 1,35,000. That means they took only 1,50,000 and reduced depreciation. They did not consider revaluation, just like previous one. Some we did. Okay. This figure is to be considered. The rate of depreciation is 10%. Very similar to previous sum. Only changes. Here also revaluation is happening middle of the year and they have given pre-acquisition dividend. That's it. So now if I come down, if I just write a timeline for you to understand. Jan 21 is start of the year. 1st July 21 is the date of acquisition. 31st December 21 is the date of consolidation. First how many months? 6 months is pre. Next 6 months is post, and at this point they have given the opening P&L data is also given as 30,000. Anything about general reserve? So what will I take general reserve as, pre or post? We have to take the assumption, but reasonable assumption. Let's start the sum. Let's go slowly, guys. Again, step 3 and 3A is my key steps. If that is over, rest of the sum will be fairly simple. This understanding I hope you guys have. So please write down date of acquisition 1st July 21, date of consolidation 31st December 21, and step 2 holding subsidiary we already computed 80% and 20%. I will straight away start with step number 3, analysis of reserves and surplus. Let's go in the same order. First, let's take general reserve because there is no adjustment, or we'll go in the same order. Reserves first is general reserve. How much, guys? 1 lakh. I will write A, general reserve 1 lakh. Pre or post? General reserve is something, if you read this question, they have not spoken anything about it. Generally, general reserve is earned this year or previous year carry forward reserves. Previous year carry forward reserves. Acquisition is happening middle of the year. That means this general reserve should have been general reserve from my previous years. So a reasonable assumption would have been to take it as pre. Let me go check the answer if they have done anything, just so that our answer aligns with them. If there is a difference, yeah, they have also taken it as pre. Look at this, reserves on 1st Jan, assumed there is no movement, so it's fully taken as pre. Are you following, guys? Reasonable assumption. What is not reasonable? Splitting as 6 months, pre post. I can't do that because it's an opening balance. So I will take it as fully as pre. You can't take it as post also. You can take assumption, but nowhere they have given hint that it's a current year profit transfer. Okay, following, guys? Everybody understanding the assumption over here? Dinesh. Second, B, profit and loss account. In the question, how much is given, guys? 80 is my profit and loss account. From this, I will split as 2. Opening is given as how much? 30,000. So current year earning is 52,000. But we have 2 key adjustments to do. One is depreciation on revaluation of asset. Second is dividend. Are you following, guys? Sorry. Everybody with me, guys? Hello. First, P&L showed a credit balance of 30,000 on 1st Jan, out of which 10% dividend was paid on 1st August by the subsidiary. A Limited credited the dividend received to its P&L account. So, who credited the dividend? A is what? Holding. I have to do adjustment in the books of holding only, correct? Ideally, what dividend is this? Pre-acquisition. So, what holding did? They passed this entry. Bank account debit to P&L. Ideally, they should have passed bank account debit to investment. So, my rectification entry will be P&L to investment, correct? See, they passed this, but you should have passed investment. So, I will reverse it. How I will reverse? Debit the P&L and credit investment. Keep this in mind. It will not come now. It will come later, correct? What is the amount of dividend? Declared a dividend of 10%. Simple. You can't look at my face. Sir will give the answer. Go to the question. Share capital is 2 lakhs into 10%. How much? 20,000. Keep it in mind. Do not write anywhere else. Clear? So this 30,000 is fully pre. From this current year 52, I will reduce what, guys? Depreciation. No dividend. Hello, dividend is already profit and loss account of B Limited. See, this is of 30,000 on 1st Jan, out of which a dividend of 10% was paid. Correct. We have to minus dividend. Why should I minus dividend? Subsidiary is paying dividend of, so subsidiary entry would have been P&L account debit 20,000 to dividend payable. Correct. So I will reduce here 20,000 and balance pre would have been 10,000. After paying dividend and current year my profit ended at 82. So now the current year balance will become 72. Are you following, guys? Let me prepare a ledger for you to understand. P&L account had an opening balance of 30,000. Correct. Follow, guys. I am going slowly because step 3 and 3A, if you understand, 4, 5, 6, you will do it better than me. Correct. So opening balance is 30,000. Then I reduced dividend and paid 20,000. They have given the closing balance in the question. Closing balance is 82,000. So what would have been the current year earning? Now only it will tally. Are you following, guys? Are you understanding? See, opening balance is 30. From this 30, I paid dividend of 20. After this, I have a closing of 82. That means current year I earned 72. That only I prepared over here. Are you getting it, guys? So this 10,000 will be pre. This 72,000 will be post. Are you following, guys? Hello? Now this dividend only you have to be careful. It's going to whom, guys? Dividend is declared and paid. So this 20, how much goes to holding? 80, 16,000 goes to holding, 4,000 goes to minority interest, which is already paid. Because they, look at this. How do I know it's already paid? Will it come as dividend payable? No. It's already paid on 1st August. So I don't have to make any adjustment for payment. I am just doing adjustment for my reserves. How many of you understanding till here? Only thing I did is total P&L is 82. In that opening is 30. Reduce the pre-acquisition dividend declared. So balance pre is 10. Current year is 72. Is the sum over? No. From this 72, I have to reduce depreciation on revaluation of asset. Correct? Then only I will find the correct post, like the previous sum. Can you tell me how much is the amount of depreciation? Reading the paragraph here. How much, guys? Additional depreciation. Now follow. This asset beginning of the year was 1,50,000. Depreciation is 10%. So closing balance will become 1,35,000. Correct? That's why if you look at the question here, PP is how much, guys? Plant and machinery 1,35,000. That means for this asset of 1,50,000, depreciation is already provided for. What is happening additionally? Middle of the year, I am adding revaluation plus. So I have to now provide depreciation only for this 30,000 into 10%. You would have got answer of 3,000, but it's not for the whole year. It's only for 6 months into 6 by 12. How much? 1,000. How many of you took 3,000? Almost the entire class. What's the answer? 1,500. So now I will reduce here additional depreciation of 1,500 and I will get net to post is how much? 70,500. Are you following, guys? So this 7,500 only is my post. Let me go check the answer. I can't check the answer over here for a simple reason. The method they would have used there is different, but I can still look for depreciations 1500. Yeah, here it is. 1500. Are you following, guys? Hold on 1 second. Okay, profits after 1st July. Yeah, got it. Are you following, guys? So now can I say, look at this, 10,000 is, are you following step by step, guys? I started off with 82. From this 82, I split pre and post. Let me do it again, guys. 82,000 is what I start. This is the only working note which is difficult, guys. Everything else is easy. From 82, I took pre as opening 30 minus dividend paid 20, so I am left with 10. What I have left is 72,000. From this you reduced depreciation of 1,500, so balance is 70,000. This is pre, this is post. Am I correct? No again. What should we do here? Now follow very carefully. You will tell me the answer. This 72,000 is earned in which year? The whole year. The whole year comprising this whole period. So again you have to split as pre and post. Are you following, guys? So this 72,000 will be split as 36,000 and 36,000. In this 36,000, which is from 1st Jan to June, correct? This is pre. In this 36,000 only, I will reduce depreciation of 1,500 and write 34,500, which is my post. Are you following, guys? Everybody have the red pen ready? Strike. Welcome to consolidation of subsidiary, guys. Previous sums all are nothing, guys. This is only a sum. Are you understanding? See, straight away I didn't give you the answer. Step by step, each step is an area where you can make mistake. This dividend 20, you would have missed it. How many of you had a doubt? Sir, 72 should be split as 36. Good, 5-6 students had a doubt. Are you following, guys? Why I am splitting, you understood? Because the 72 is for the whole 12 months. Acquisition is happening in the middle of the year. So 36. Now depreciation is only for second 6 months. That's why I should reduce 1.5 in second half. One more common mistake what students will do is, they will do 72,000 minus 1,500 and then they will split. Not correct. Because the full reduction of depreciation should come only for post. Are you following, guys? So pre is 10,000. Again pre is 36. Post is 34,500. Are you following, guys? This only is the final answer without red pen. This is the answer, guys. Clear? Come on, guys. Consolidation. So far it's easy. This also is easy. See, I'm just telling you, adjustment wise we are accounting. Everybody understanding? Next, what is the next? This is second one. This is my profit and loss. General reserve was easy. 1 lakh fully pre. So in your library of adjustments, if when you are doing consolidation, you will mark this adjustment added to your library. The previous sum you did, similar sum of revaluation, that was easy because it happened on the beginning of the year. This sum is equal to solving that sum. So day before exam, don't waste time in that big sum. This sum is more important. Are you following, guys? Now come down. Third reserve is what, guys? Revaluation reserve. How much? 30,000. 1,50,000 became 1,80,000. This is fully pre or post? Same like previous sum. What is this? Revaluation is happening on the date of acquisition. So it's fully pre. How is it post? Remember the previous sum, guys. Illustration 15, 16 or 14 something. See, revaluation is happening on the date of acquisition. So it's fully pre. We will check that. I want to cross check. Revaluation here 30,000. Not this, sorry. Yeah, revaluation will be fully pre. Are you following, guys? But is my revaluation 30,000? It's not 30. Follow very carefully, guys. It's not like previous sum. Look at this. Look at this. Revaluation is happening to how much, guys? 1,80,000. Value was 1,50,000. How many of you took 30,000 as revaluation? 1, 2. I'll tell you the again common mistake here. Now look at this. It is pre. Pre is correct. I will just draw the timeline. You tell me whether we are correct or wrong. On 1st Jan, asset was worth, but revaluation happened after 6 months to 1,80,000. You are comparing value on 1st Jan and 1st July. Can you do that? It is revaluation of the book value on 1st July to 1,80,000. Correct? That means you have to provide depreciation for 6 months. That means how much is that? 1,50,000 into 10% into 6 by 12. How much? 7,500. That means the book value of asset from 1,50,000 reduced by 7,500. It became 1,42,500. No, sorry. Yeah, correct. 1,42,500. So on the date of revaluation, asset was not 1,50,000 because you forgot 6 months of depreciation. Asset was 1,42,500 became 1,80,000. So your revaluation gain is 37,500. This will not be 30,000. This will be 37,500. Another common place where you can go wrong. Step number 3. Anywhere you have gone wrong, full sum is gone. Are you following, guys? How many of you understanding 37,500? Clear? Easy ones. Okay. We are still in step 3, guys. This full 37,500 is what, guys? Pre. Everybody understood the logic, guys? Okay. How many of you got 37,500 first time correctly? Had a doubt? Had a doubt but didn't. Okay. Had a doubt, but had a doubt is good. I intentionally wrote 30 first just to see. Of course, that's the thing. Done, guys. That's it. No more adjustments as far as I can remember. Beyond this adjustments there means I also made a mistake. Let's write down. Now step 3A. Step 3A. Particulars. Total holding minority. First is share capital. Second, total pre. Third, total post. Share capital. Take the share capital of subsidiary. How much, guys? 2 lakhs. Holding percentages 80, minority is 20%. So 2 lakhs into 80%, how much, guys? 1,60,000 and 40,000. Go above, calculate the pre. I will help you out. First I will add this revaluation 37,500. Go up plus 10,000 plus 36. Correct? Add both. Then again go to general reserve. Add 1 lakh. So how much are you getting, guys? 1,83,500. Consolidation, please make a note, guys. If you think I will copy from ICA study mat, you will not understand anything. When you look at the ICA study mat, it's completely different steps over there. I will show that you right now. 1,83,500. Holding 80% is how much? 146. Minority is 36,700. Similarly, total post go up 34,500 plus anything else. That's it. Just 34,500. Let me cross check if that's the answer. Yeah, correct. 34,500 is correct, guys. So how much is holding? 27,600. 6,900. Are you following? Everybody got this? If I show you the same thing in the book, ICA study mat, how they would have done is, they would have done for each item separately. P&L 34,500, they have taken minority here itself. Similarly, capital profit, they will do total pre separately over here. Look at this, 1 lakh plus this full adjustments come over here, then holding share minority. The answer is same, but the way we are doing it is different. So here minority is how much? This goes to step 4, 80, 600. Pre is, which goes to step 5, 2 lakh, sorry, 3 lakh 6,800, and this goes to my step 6 reserves. Should I do this in every sum? No need. Just keep it in mind. I just want to communicate the importance of this table. Are you following, guys? After this, nothing great in the sum. You can just run through it. We will also run through together. Step 4, minority interest. How much? 83,600. Or the other way of doing this without doing all these steps is nothing but share capital plus reserves and surplus plus revaluation reserve into 20%. You will get the same answer. Are you to check your answer? What is the share capital that we have? 2 lakhs. Reserves and surplus, general reserve is 1 lakh, P&L 82, correct? 82,000 plus revaluation is how much? 37,500. You have to also reduce which one? Dividend, because you can't add 82. So not dividend, you can't add 82 like that. You have to add reduce that excess dividend, correct? Post acquisition excess dividend minus 1,500. Guys, see, minus depreciation. You are right, minus depreciation, because 82,000 of reserves is without depreciation. Now you check, guys, you will get the same answer. 2 lakh plus 1 lakh plus 82,000 minus 15 plus 37,500 into 20%. Are you getting 83,600? Are you following? Even if your step 3 is wrong, you can cross check your answer. I can cross check my table very easily, guys. I will just take share capital plus reserves plus the excess whatever adjustments into 20%. Getting it, guys? Why I am adding 37,500? New adjustment. Why I am reducing 15 depreciation? New adjustment on the revaluation. So balance into 20%. So minority two ways. Even if step 3 you get confused, sir, I don't know what to do. You can check your table's accuracy by doing a quick calculator computation. Are you following, guys? Are you understanding? So double confirmation. I know that this is the correct answer. 83,600 should be minority. Let me go and check. This is the answer. 83,600 is minority. Are you following, guys? Guys, understanding? Consolidation easy or difficult? Hello. Lakshidhar, after this sum. Next, step 5. Step 5, computation of goodwill. Or I want you to do this. Those who do this correctly are understanding logic. Give me the answers, guys. Yes. One answer is 33,200. One more answer. 17,200. Anybody else? Anybody else, guys? I'm sure all of you will end up with these two answers. Anybody else? Any other answer? Follow, guys. Now, what is cost of investment? Okay, first I'll write the equation. Cost of investment minus net asset share. This net asset share only we have in the magic table, which is 1,60,000 plus 1,46,000, which is 3,06,000. See, please don't write straight away 3,06,800. Show the breakup in this step also. Even though the breakup is there, please show the breakup. What is cost of investment given in the question? How much, guys? 3,40,000 minus 3,06,800. You will get the answer as 33,200. How many of you got 33,200? What is the mistake in this? You forgot to reduce dividend. That starting of the sum, you have to reduce from this pre-acquisition dividend. How much, guys? You can't reduce full dividend of 20. You should reduce the dividend received by holding. That's why in starting I gave a hint. If you remember somewhere here, that 20,000 holding share is 16. That rectification entry, you remember? That rectification entry was what, guys? It was PNL2 investment. So I will reduce 16,000. What is the net value, guys? 3 lakh. 24,000 minus 3 lakh 6,800. For something worth 3 lakh 6,800, I paid 3 lakh 24. So my goodwill will be 17,200. How many of you got 17,200? Good job. Others, most of you have got 33,200. You forgot to reduce dividend. Again, while reducing dividend, be very careful. Don't reduce 20,000. Reduce what I got. 16,000. Holding got. Everybody following, guys? Goodwill easy, guys. Hello. Next step. Computation of reserves and surplus. First I will write reserves and surplus of holding. Copy paste. How much? 2 lakh 97,200. Correct? Yes. See, first I should take the reserves of holding, guys. With that only I will add subsidiary post 2 lakh 97,200. See, reserves and surplus for consolidated financial statements. Next to what, guys? Add post acquisition of subsidiary limited. How much, guys? We computed somewhere above 27,600. Anything else? Correct. So next adjustment, what we will again forget is, what was the rectification entry for dividend received? P&L account debit 16,000 to investment 16. This only I told in the start of the summer. 16,000 you all reduced here. Correct? Correct? See, to investment, I reduced the credit effect. If you give credit, I should also reduce debit. So from the reserves, I will also reduce dividend wrongly credited earlier. Correct? Wrongly credited, or in other words, less pre-acquisition dividend. How much, guys? 16,000. And now I am left with balance 3 lakh 8,800. Are you following, guys? Janesh, you are getting it? See, some has multiple areas where you can make mistake. Intentionally, I am stopping over there. You are making a small, some of you are getting it, but the idea is all those areas where we can miss out. Are you following, guys? Will depreciation come here? Will I reduce depreciation here? Already reduced only, and you got 27,600. So any capital reserve? No. Answer is 3 lakh 8,800. Let me check if that's correct. I don't know if it's correct. 3 lakh 8,800. Are you following, guys? Everybody understanding? Hello. Now what is left? Any intercompany? No. Straight away I'll prepare what, guys? Consolidated financial statements. Can you guys quickly try it out? I will solve in 5 minutes. But please try it out, guys. Please try out the consolidated financial statement. It should tally. Nothing new. It's only the existing adjustments. Please try it out. Everybody, guys. Last sum for the day. I'll give you notes for dividend alone after the sum is over. That's it. Recording students, please wait till the ending. I'm going to dictate some important notes. Otherwise, do the balance sheet. Look at your working notes above. They are our base, guys. They give you so much answers already. Step 1 to 6. If you're done with the balance sheet, put the hand up. Anybody wants to copy anything here? Anybody wants to copy this? Recording, pause and copy. Anybody copying this? Recording, pause and copy. Everybody started the CFS. Very good. Prepare the CFS in schedule 3, guys. It's going to be our penultimate sum. After this, just one more sum in consolidation. So I need the confidence, guys. Come on. Till the step I help you out. But preparation of balance sheet, you should be able to do it by yourself. Rather, I'm finished, hand is up, balance sheet tallied. Accounts is going to be your first exam, guys. Whatever you do, group 1 accounts is first exam. The confidence that you get in the first exam will carry forward for all the other exams, guys. ICA knows that. You also know that. Get that confidence in the class. Tally the balance sheet. Nothing new, just like previous sums. I will keep putting pressure. One student done. 49 more to go, plus recording students. Scroll down. Current assets. Recording, do it. Online live, do it. I'm just going to prompt whenever somebody finishes and tallies. It may not tally. I'll tell you why also when I will start solving it. But not finished, but not tallying. You can put the hand up. Finish, not tallying. Also can put the hand up and try to tally it. This time I can guarantee you that most of you have made mistake in asset side, not liability side. Come on, guys. 2, Rahul has finished. 2 are finished. Even if you are finished not tallying, put the hand up. It's okay. 3 students are finished in the class, guys. Online recording, come on. Not tallied, I can exactly tell you where you made mistake also. Most of you will be struggling on the asset side this time. Tallied. Not tallied, but done. 4 of them are finished, guys. I am done but not tallied. Put your hand up and still look for the answer. The clue is asset side. You might have missed it. Online, Aishwarya has finished. 5 students are done, guys. Come on, another 1 minute or 2 minutes. That's it. 6 are finished. Tallied. Not tallied. Not tallied. Tallied. Rahul. Not tallied. Lakshita, yes. Tallied and hand up. Good. So, yes. Tallied. But you finished. We have 8 students whose hand is up, guys. 4 have tallied, 4 have not tallied. Aishwarya and Netra, put in the chart. Recording students, come on. I'm just prompting only for you guys. Santosh, just put in the chart. Tallied, not tallied. Aishwarya, Netra, Santosh, yes. Put in the chart. Tally or not tallied. Santosh, not tallied, but he's done. Others, Vignesh finished, not tallied, everybody not tallied, but finished. We have some students who have finished and tallied also. Netra, yes, what is it? Okay, let me start solving, guys. Last 30 seconds. Tallied, Kalyan finished and tallied. Now tallied, yes. Okay, follow, guys. Let me start. Star capital, what is it, guys? Consolidation. 5 lakhs. Anybody wrote 7 lakhs? Check neighbor's note. Good. One of the batches where you are not writing 7 lakhs after repeated prompts. Otherwise, 7 lakhs I used to get a lot. Good. 5 lakhs. Remember, guys. 1 minute left in exam. Consolidation left. Straight away prepare the balance sheet. Right? 5 lakhs. Trade payables. 4,700 plus 17,400. How much? 64,500. 1 mark out of 20. I'm saying 1 minute left. You have to do consolidation. At least do the line by line addition. Okay. Short term borrowing. 80 plus 0. 80,000. 1 mark. Guaranteed 1 mark because of step mark. Okay. Reserves and surplus, no time, only 2 minutes left in exam, but we have done it. What's our step, guys? How much? 3,08,800. 3,08,800. What will come next? Minority interest, how much? 83. That's it. This is the liability side total. How many of you got this on liability side? Everybody would have gotten this. Problem is on the asset side. Let me go check liabilities once. 5 lakh, 3 lakh 8, 3600, add these both. Correct? That's what you also did. Hello? Short term borrowings they wrote here, but here they wrote short term provisions. I have to check the nature of the item. Must be some printing issue. Bank overdraft, no, it's short term borrowings only, not short term provisions. Again, ICA study mat, is this word there for you guys? Short term provisions, just check Sumaya. If short term provision is there means strike it off, it's short term borrowings. Borrowing only, that means this material, it's mistake, corrected, fine. Then guys, now come to the asset side. 3 lakh 40 is investments, that will become 0. Come back here guys, 3 lakh, I will come to PPE in the last because your difference will come only in PPE. 3 lakh 40 is 0. These 3 inventories add, trade receivables add, cash add. Sir, dividend sir, I will reduce cash, already paid. So I will get 1 lakh 56 400, 99 800, cashes. This also I am sure all of you would have gotten correctly. Goodwill how much? 17. This also everybody have written, correct? Now it will tally balancing figure PPE, sir. No. We have to compute PPE. So PPE is very simple. Come down. It is going to be breakup of 4 things, correct? 1 lakh 50 plus 2 lakh 40 plus 1 lakh 80, no change, because revaluation is happening only for this. So write the first 3 things in your working note as it is. 1 lakh 50 plus 1 lakh 80 plus 2 lakh 40. This also no change guys. Only this 1 lakh 35 will go for a change, which you have to compute from scratch. That is very easy. There are 2 ways to compute. First, let me do in the usual way. Initial, I am going to split my asset into 2 guys. Revalued part separately, non-revalued part separately. Non-revalued is 1 lakh 50 minus depreciation of 10%. For whole year, it becomes 1 lakh 35. The revalued part comes here as 30,000 minus 7,500. You get how much? 22,500. Total is 157,500. Is this correct? Hello? Is this correct guys? What I am doing here, from 1 lakh 50 I reduced 15, took 1 lakh 35, 30 reduced 75 to 20. Can I do it like that? This 6 months only, no? Why 6 by 12? This for the whole year, no? 12 months I am giving. This is not 7,500. Hello? This is 30,000 into 10% into 6 by 12. So this will be only 1,500. So instead of 22,500 it is how much guys? 28,500. Now total 1 lakh 1,63,000. Is this correct? Is this correct guys? No. I am splitting my asset into 2 parts. I can't do it like this. So how should I do it then to find book value? How do I do it? Okay. Second method, what Radharam is saying is, middle of the year only asset got revalued to 1 lakh 80. So that means on 1st July 2021, correct? Book value is 1 lakh 80. Now I have to provide depreciation for 6 months. So I will do 1,80,000 into 10 by 100 into 6 by 12. You will get 9,000, that will be reduced. So I will end up with 1 lakh. Is this correct guys? Yes. Now what is the mistake in this method? Why we are not getting same answer in this? Why we are not getting same answer if I split? One lakh 42, 250. Now the reason is perfect. Sumaya got it. 1 lakh 50 depreciation is not 15,000 for the whole year. Middle it's stopping at 1 lakh 42, 250. So basically how you should do is split the first 6 months separately. Then 1 lakh 42 is becoming 1 lakh 80. Then again you do this for 6 months. That only we did over here. So the answer is 1 lakh 71,000. Another method that you can do is start with the book answer as per book, which is 1 lakh 35. Add the revaluation of 30 and minus additional depreciation of 1000. No, this is 1500. So you will get how much? Sorry. No, I'm starting with this value. If I start with 1 lakh 35, this 1 lakh 35 is after providing full depreciation for the initial asset, correct? From this there was a revaluation of 30,000 and minus how much, guys? How much you are getting now? 1 lakh 63. Fine. No, I'm just trying to derive the answer. See, the answer is 1 lakh 71,500. From here, I'm just trying to derive 1 lakh 35. 1. Okay, before revaluation plus 30 minus 15. How much you are getting? 1 lakh 71,000. So my answer is 1 lakh 71,000. Go check if it's correct. Yeah, 1 lakh 71,000. How it came? Look at this, guys. This is what I was trying to figure out. So from 1 lakh 35,000, we are adding revaluation impact plus the depreciation, add back appreciation. Appreciation was how much, guys? 37. So correct only we did. We should not take 30,000. We should basically take here. 1 lakh. No, it's correct only. See, 1,500. 1 row. Guys, everybody understood 1 lakh 71. I am just showing alternate ways of solving. 1 lakh 50,000 plus 37,500 minus 1,500. You get how much? 1 lakh 71,000. I just wanted to show this. Even in the first method that we did, here also we will get the answer. Instead of 30,000, if you take, see, there's one more easy way to do it. I am splitting the asset into two, guys. 1 lakh 50, I am keeping it as it is. 37,500, I am keeping it as it is. From this, I will reduce 15,000 for the whole year. It becomes 1 lakh 35. From this, I will reduce 1,500. It becomes 30. How much are you getting? 1 lakh 71. Are you following? This is the method I wanted to communicate. More easier one. Keep the asset without revaluation separately, with revaluation separately. Multiple methods, we get same answer, 1 lakh 71. So you will go back to your working here. Everybody understanding 1 lakh 71? Hello. So I will go back here, add how much? 1 lakh 71. What's the total, guys? 7 lakh 40. Is it tallying now? Yes, that's it. Are you following, guys? Everybody got it? Check the answer here. Yeah. Total is 10 lakh 36,000. Please write some notes alone now. Write the word. With this sum is over, guys. You can put full stop. Go to your concept note or wherever you are writing notes for consolidation. Write down dividend. I'm just giving a chart so that you don't get confused for any other type of sum. From the word dividend, split into two. Declared by subsidiary declared by holding. Are you following, guys? I'm trying to bring in all the permutation combination possible for dividend in a sum. First, let's finish dividend declared by holding. Down arrow. What you will do? Nothing to be. It's dividend of holding. So holding reserves. The normal entry will be reduce from reserves and surplus of holding. Correct? Of normal entry, which is P&L account debit to dividend payable. That's it. This will be my normal entry. Nothing great about this. Clear? If it comes in a sum, you don't have to panic. If holding is giving dividend, no split, nothing. Okay. Dividend declared by subsidiary. Dividend declared by subsidiary split into two. From post acquisition profits, from pre acquisition profits. Are you following, guys? From post acquisition, from pre acquisition. I am going to write the correct entry over here. Okay. From post acquisition profits, for subsidiary, what's the entry, guys? P&L account debit to dividend payable to cash. For holding, what's the entry? Holding is receiving dividend, correct? So I'm receiving dividend. So bank account debit to what, guys? Dividend from post acquisition will be taken to P&L. But be very careful here. Only holdings share. 80% means I will take what, guys? 80%. Are you following, guys? This entry will be for 100%. Are you following? Hello? I'm giving the full flow, guys. Every sum will have just one adjustment. If this is not the correct impact, you have to do what? Rectification. I will give that also for you. Pre-acquisition profits. From pre-acquisition, subsidiary entry will be the same. Correct? Subsidiary entry will be the same, but for holding entry will be bank account debit, its respective share 80%, whatever our example 80, to investments 80%. Are you following? Clear? Below this, write down note. Note, if pre-acquisition dividend, below this write down note, if pre-acquisition dividend is taken to the credit of P&L, if pre-acquisition dividend is taken to the credit of P&L by holding company, if pre-acquisition dividend is taken to the credit of P&L by holding company, that means look at this sum that only happened. Pre-acquisition dividend, I passed this entry, I took it to the credit of P&L, then we have to do rectification. So write down, if pre-acquisition dividend is taken to the credit of P&L by holding company, then holding company has to pass a rectification entry. What's my rectification entry, guys? What we just did in this sum. P&L account debit to investment. Are you following? Understood? Write note 2. If you understand this, you got the logic. Write note 2. Note 2 is the opposite of note 1. What is note 1? I don't want to confuse you with a lot of notes, but if you know the concept, you don't even have to remember This chart is not even needed. I am giving the opposite. If post-acquisition dividend is taken to the credit of investment, are you following, guys? If post-acquisition dividend is taken to the credit of investment, if post-acquisition dividend is taken to the credit of investment, if post-acquisition dividend is taken to the credit of investment, that means look at this. From post, I have passed this entry by taking to credit of investment. We have not done a sum like that. We don't have it. Then rectification will be, what is the rectification, guys? Ideally, it should go to debit credit of P&L. You took it to investment, which is not correct. So my rectification will be investment account debit to P&L. Do not try to memorize this. I am just giving notes for your later reference. Investments to P&L. Each sum can be any way. You have to properly account. Are you following, guys? If dividend is still not payable, then if it's still payable, not yet paid, then minority interest share will be increased by dividend receivable. Are you following, guys? Very important. They have never tested a sum like this. What is minority interest? What is payable for them? So if dividend is declared and not paid, we did one illustration also, remember? Then it will be, for minority interest working will be share capital plus reserves and surplus plus dividend which is payable to them. Are you following, guys? Clear up? Understanding? Now last one, 30 seconds concept. With that full theory in this chapter will get over. We just have one sum, last practical sum left, and consolidation of subsidiary. The biggest volume is done. Last small concept, sir, what to do with preference shares of subsidiary? In none of the questions that we solved, we had preference shares, correct? In one sum it came, I asked you to memorize and take it to minority interest. That's the answer. If there is preference share of subsidiary, you don't worry about it. Do the sum as if it's a normal sum. In balance sheet, you will disclose in minority interest. Why? Because do preference have voting power? So minority interest is the minority apart from my voting power. So that is also what I have to pay to outsider. It redeemable in 20 years. I have to pay them. So just like how minority has what is payable to them, preference share also will be considered as part of minority. Yes. What if the preference share is convertible preference shares? It will come in disclosure of notes that future it's converted to equity, then you will do relevant adjustments. Like diluted EPS, you will do an adjustment, not part of our syllabus. For us, preference shares means minority. That's it. You will deal with it and finally. Clear off. Got it? Yes. In certain situations, preference share also will have voting rights. Correct. So preference shares also with voting rights. Then adjustment will vary, but we don't have that in our syllabus. For us, if you see, it's very, very simple. Of course, there are more adjustments. For us, the theory of preference shares is very limited. Where is consolidation, guys? Okay, 238. Somewhere here you will have a small adjustment. Preference shares means what I will do. That's it. This only I gave notes, guys. There in the book, dividend receipt from subsidiary, how to account it. Treatment of pre-acquisition dividend, same chart. I gave it a simpler way. Intra-group. Somewhere here there will be preference shares also. Alignment of reporting. Remember I told you guys, reporting dates if it's different, you have to make it one of holding. Similarly, consolidate P&L, consolidate cash flow is done. Uniform accounting policies we finished. It can be different, but for consolidation we will take. Yeah, look at this. Treatment of subsidiary company having preference shares. We will read and understand. That's it. Our book study mat has only one small paragraph, even though it's much more. That's only there in our syllabus. While preparing CFS, outstanding cumulative preference shares issued by subsidiary are considered in the same manner as any other liability such as debentures. Accordingly, the cost of such need to be adjusted for. Therefore, while computing its share of profit or subsidiary, the parent should make adjustment for preference dividend like liabilities, okay. Such preference shares represents external liability. It would be appropriate for parent to compute its share of profit loss after adjusting subsidiaries cumulative preference dividend, whether they are declared or not. Okay, here they are not talking about where to disclose. Basically, they are taking it as liability. So when you compute net assets, you will do asset minus liability. That liability will include preference shares. Here what they are explaining, if it's cumulative preference shares like AS20, even if dividend is not yet declared, I will reduce dividend. That's what they are saying. Look at this. In case of non-cumulative preference shares, no such adjustment is required unless the dividend is actually received. But cumulative preference shares means I will reduce dividend like a liability. That's it. Treat it where, guys? Take it in minority. Nothing new, nothing complicated. Take it in minority, treat it like a liability. That's it for exam. We don't have a sum, or we had one sum, correct? That's it. With that, concepts and consolidation is done, subject to that one last question. So next class we will finish off that one last question, which will take approximately 1 hour, and then jump into other new topics. Okay, fine. Any doubts? Hello? Fine. Then thank you guys. See you all in the next session.